Well, hello everyone and welcome to Moementum Channel. Today we are going to be talking about three quality dividend stocks that pay a solid dividend, yielding more than 6%. All of these dividend stocks are in fact in the energy sector, and perhaps there is an obvious reason to that. For those of you who might not be familiar, energy sector has been the one that so far in the past 1 year has crushed it in compared to the S&P 500. In fact, looking at the stats, you notice the past 1 year return for energy sector is at 74% compared to the 1 year return of only about 17.6% for S&P 500. So energy sector stocks have done quite well. And for also, it's also worthwhile mentioning that energy sector has a dividend yielding overall higher than any other sector. In fact, the dividend yield for the energy sector as a whole, the average is at 4.28%. But as I mentioned, we've picked three of the best energy sector stocks. All of them are paying a dividend more than 6%, and in fact are considered to be undervalued at this time. So let's get into this video.
I like it. Woo-hoo.
Our very first pick is a company that is Canadian, but is also available on New York Stock Exchange. For investors outside of Canada, you could access it through New York Stock Exchange with ticker symbol PBA. It's for Pembina Pipeline. But for investors inside Canada, the ticker symbol on Toronto Stock Exchange is PPL, ppl.to. Pembina Pipeline has become a major midstream service provider with a network of oil and gas pipelines and storage facilities and processing plants located in Western Canada. The firm's energy infrastructure serves as a one-stop shop for producers to move their hydrocarbons produced in Canada to the highest value markets throughout the world. And it is also worth mentioning that Pembina's conservative approach to running its business mitigates most company-specific risks, but income investors who are comfortable with the risk profile of Canada's midstream industry will need to monitor how the energy sector would pan out. From a dividend safety score, Pembina has a safety score of 80, making it a safe dividend payer. And the dividend yield is at a juicy 6.15% at this time. The last trading price for Pembina was at $32.20 in US dollars, which is kind of a reasonable price for investors who do not want to invest a ton of money into buying a high quality dividend paying stocks. From a stock volatility perspective, Pembina has a beta of 0.79. A beta is a measure of volatility, and a beta less than 1 suggests that the stock is less volatile than the overall stock market. And in this case, given that Pembina's score is at only 0.79, it indicates that this stock is less volatile than the stock market. Looking at the market cap for Pembina, it is at $17.7 billion, making it a large cap company. Let us take a look at the other key metrics when it comes to dividend. The payout ratio for Pembina is at 54%, which is considered low for pipelines. And their forward payout ratio is also at 63%, or which is categorized as low, giving it a ton of room and time for increasing its dividend for many years to come. In fact, Pembina has been paying its dividend uninterrupted for the past 22 years. In terms of the dividend growth streak, you notice that the Pembina has been increasing its dividend year after year for the past 9 years, and they have paid their dividend uninterrupted for the past 22 years. Pembina does pay its dividend on a monthly basis, and the annual payout ratio currently is at $1.98. In terms of valuation, Pembina's current dividend yield of 6.15% is about 19% above their own 5-year average of 5.18, indicating that now could be a reasonable time to invest. What's more, if you look at their forward price to discounted cash flow, P/DCF ratio, which is at 10.2, it is close to that of their own 5-year average of 10. And the market as a result appears to be valuing the stock similarly to how it has had in the past, suggesting that could be a fairly valued price. Let us take a look at as well at the 52-week price range. The last trading price for the stock is hovering a little bit closer to the 52-week high price, which was at $34.46, but it still has some room to grow. It's not currently trading at exactly that 52-week high price. We're going to take a look at the stock return. In the past 1 year, the stock has shown a return of 16.50%, and the past 5 years, it is showing a return of 2.45%. What's quite noticeable about Pembina is, of course, their high dividend yield that they've been paying uninterrupted for the past 22 years. And that's probably one of the key pieces that intrigues many investors why they want to pick this stock. And in this case, they also do their dividend on a monthly basis, which it makes it quite an interesting choice for investors looking for a reliable passive income. In terms of analysts covering the stock, there are 11 of them. 4 of them have a buy rating and 7 of them have a hold rating on TipRanks, with the stock a 1-year price target at $34.53. And if that holds true, that shows an upside of 7.24%. Analysts on Yahoo Finance give the stock a price target of $35.47. This is for the price for the US dollars version of it. And analysts on Yahoo Finance for the Toronto Stock Exchange version of the stock, as I mentioned, it is also available on Toronto Stock Exchange, have a price target of $44. And this is based on the last trading price of $41.09 in Canadian dollars. Lastly, we're going to take a look at analysts on Simply Wall Street who look into the fair valuation of this stock. According to them, the fair value for this stock is currently at $34.53, resulting in a fair valuation of 6.8%. In other words, this stock is 6.8% undervalued compared to that fair valuation. Next, we are going to take a look at our second pick, which is Enterprise Products Partners. Enterprise Products Partners has been around since 1968 as a wholesale market of natural gas liquids, and they have grown into one of America's largest midstream master limited partnerships that services both producers and consumers of natural gas liquids. They have a safe dividend safety score of 65, making it a safe dividend payer. Enterprise Products Partners is traded on New York Stock Exchange with ticker symbol EPD. They have a dividend yielding 7.75%, which is just quite a high dividend. And from a beta volatility perspective, they have a beta of 0.70, suggesting the stock is low volatility and less volatile than the overall stock market. Last trading price for EPD was at 24 USD. In terms of payout ratio, they are showing a current and forward payout ratio of only 60%, making it a low payout in that sense, giving it a ton of room for increasing its dividend for the many, many years to come. And during the recessions of 2007 and 2009, it's worthwhile mentioning that the company continued to increase its dividend. EPD, Enterprise Products Partners, they have been paying their dividend uninterrupted for the past 22 years, and in all of those years, they've increased it. They currently pay their dividend quarterly in the months of February, May, August, and November, and have an annual payout of $1.86. From a valuation perspective, their current dividend yield is about 17% above their 5-year average of 6.62, and also their forward price to discounted cash flow ratio of 7.8 is below their 5-year average of 9.8, suggesting their stock looks kind of cheap compared to how the market has valued it in the recent years. And if you look at the price range in the past 1 year, still there is some room to grow compared to that of the high price range in the past 52 week, which was at $25.44. A stock return is showing a 1-year return of 14% plus, and the past 5 year, it is showing a negative return. The past 5 year, the cumulative return is at negative 16.35%. Again, here, for many investors, it is worthwhile mentioning that high dividend that the company has been paying, and if you take advantage of some of those stock price declines, you would have been able to bring your cost average down in over the span of those past 5 years. The really major decline you could notice was in early 2020. That's based on the 5-year price target. You notice how the stock price was declining. Since then, gradually has recovered. There are 9 analysts covering the stock on TipRanks. 6 of them have a buy rating, 3 of them have a hold rating, giving the stock a moderate buy with the average price target in 1 year of $28.88, suggesting an upside of 20.3%. Quite decent upside. And analysts on Yahoo Finance have similar type of approach with a price target of $28.81. Next, we are going to take a look at analysts on Simply Wall Street. They have a fair value of $36.37, suggesting their stock is undervalued by 34%. Our third and final pick is another American company, Magellan Midstream Partners, which is the largest, America's largest master limited partnerships, and they actually their pipeline systems primarily transport refined petroleum products such as gasoline and diesel fuel from refineries, helping them eventually reach gas stations, truck stops, airports, and other end users. And the rest of the business consists of mostly oil pipelines. Magellan Midstream partner is available on New York Stock Exchange with ticker symbol MMP and has a dividend yield of 8.6%, 8.60%, just remarkable. From a stock volatility perspective, the MMP has a beta of 0.58, suggesting that it's low volatility stock. And the company has $10.3 billion in market cap, making it a large cap company. The last trading price for MMP was at $48.24. And this is in US dollars. From a payout ratio, the current payout ratio is 81%, edging higher for MLPs, but in terms of the forward payout ratio, it's at 79%, which is considered to be low for the MLP companies. The company did continue to pay its dividend and increase it, in fact, during the recession years, and it's been paying its dividend uninterrupted for the past 19 years. In all of those years, they've increased it year after year. The company's dividends are currently paid on a quarterly basis in the months of February, May, August, and November, and their annual payout ratio is at $4.15. If you look at valuation perspective, the current yield of 8.60 is 32% above their 5-year average of 6.5, indicating that now could be a reasonable time to invest. What's more, their forward price to discounted cash flow ratio, which is at 9.2, is below their 5-year average of 11.9, suggesting that the stock may look cheap compared to how the market has valued it in the recent years. And finally, looking at the price range, their 152-week high price range for the stock was at $53.53, and the lowest price range was at $40.34. So hovering somewhat in between. The 1-year return for this stock was at 18.80% positive, which is remarkable. But the 5-year, you notice, is down by close to 40%, 39.21 to be exact. Again, while you see that kind of gradual decline, the 2020, early 2020 was when the stock had the massive hit. But it has recovered nicely since then. You notice, for the most part, the 1-year return, and in fact, if you look at even 2-year return, probably is even more impressive since then. Again, you can beat that solid dividend of 8% plus at this time. Magellan Midstream stock has 8 analysts covering it on TipRanks. 6 of them have a hold rating and 2 of them have a sell rating, with a 52-week and apologies, with a 1-year price target of $52, which is not the highest, but it still gives it a 5.12% upside for the stock. Analysts on Yahoo Finance have a price target of $53. And lastly, analysts on Simply Wall Street give the stock a fair valuation of $70.45, suggesting that stock is undervalued by 31.5%. There you have it, folks. A quick look into 3 undervalued dividend stocks in energy sector that have been paying their dividend over 6%. And as we saw, some of them even pay a dividend close to 8% plus, which is just remarkable. We did a thorough review here and did a lot of research to put this video together. So we really appreciate it if you can give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, subscribe to our channel. It really helps us a lot to grow the channel and reach out to other investors and like-minded individuals who are interested in dividend stocks, investing, as well as ways to reach financial freedom. I do have a quick question for you though. Are you invested in any of these stocks or any other energy sector stocks? I would love to hear from you. So be sure to leave me a comment down below and share your ticker symbol that you're invested in terms of the energy sector stocks. Thank you so much for watching this video, and I hope to see you next time.